Rana Gupta is with us, Senior Portfolio Manager, India Equity Specialist at Manulife Investment Management. Rana, good morning. Great to have you with us here this Monday morning. Appreciate your time as always. Rana, how are markets looking? Are we entering a bit of a turbulent phase? And specifically, if you can begin by sort of telling us what you think of what if the Bank of Japan increases interest rates? Is that going to be a dampener for risk sentiment around the world?
Hi, good morning. There might has been expected for a long period of time, so it could happen. But I think to correlate that with the dampener for risk sentiments across the globe for an extended period of time, I think is a bit of a stretch perhaps, because something so widely expected will not dampen the risk sentiment for a long period of time. I also want to make a broader point that this the narrative around a rate hike and the risk sentiment of the markets is important. I mean, I'm not saying it's not important. It's important for around that rate hike announcement and stuff. But if you take a step back and see that beginning of this year, we were expecting 6 rate cuts by Fed, and right now I think you were also pointing out that we are now expecting only 3. So 3 rate cuts have been priced out. What has been the impact on S&P? Not much. So I think more important to focus on the economic policies of respective policymakers, governments, and the fiscal policy, and what is driving the growth. While the central bankers remain very important, but rate is very important, but we also have to look at their balance sheet size and the liquidity that they've injected over last so many years. So we have to consider all those things, not a rate hike in standalone factor.
Absolutely, and that's an important point. I mean, markets kind of just shrugged its shoulders, right, as 3 rate cuts have been priced out. But Rana, you would agree that about 85% of that S&P performance, right, is 7 stocks this year. Just 7 stocks. So sorry, go on.
No, that's absolutely true. I think that's why I'll make 2 points here. First, I made that once rate hike is important, rate hike or cut expectations are important. But I think important to look at the policy and the technology and what's happening in different markets. I think AI is a pretty important theme, and the Magnificent Seven are all linked to that. So they are doing well. I mean, if you go back to the discussions that you must have had, let's say in the beginning of this year, the idea was that these stocks are factoring in too much in the duration is too much. So if the rate hike, if the rate cut expectations are priced out, they miss a correction. Actually, that hasn't happened. And on the point of the US, the Russell, the small and mid cap, of course they have underperformed. But if you look at off late, they're beginning to come back a bit. So I think again, one has to look at a bit bottom up, and what's really happening going on is there. I think this Magnificent Seven, the AI is a big theme, and that's why those stocks have responded the way they have.
Okay, that's interesting. But how are you approaching the Indian markets now? Because the run has been very strong, and now there is a sense that there could be a little bit of consolidation, maybe some time correction as well. Is that the best way to look at it? Because we have a big event upon us, which is the election somewhere mid-year too.
That's true. I think election is there, and there could be some. The market is a very fantastic run, so it's. I think it's fine that the market time consolidates for some time, but I also want to focus a bit on what triggered this consolidation. This entire the thing on mid cap and the small cap things. So I think, and that's kind of triggering a bit of consolidation everywhere in those indexes as well as in the Nifty. This consolidation continue for some more time. We don't know. We are not sure the time frame. Probably a month or so. But what we would note is this: the earning growth of NSE, the Nifty is about 15%, and that of the mid cap index is about 20%. So the earning growth remains quite strong. The mid cap index, because so much of flows I understand came in the domestic mutual funds, the mid cap index says the premium went to about 25% to the large cap, and given the last 2 weeks underperformance is already down to 20%. So maybe this Nifty mid cap can probably, there is possible relative basis they can correct another 5%. But any such things in mid cap, or let's say a bit of consolidation in the Nifty itself, will actually encourage a better prospects, because the earning growth rate and what's fundamentally happening within India, which we believe that capex driven earning growth will be pretty strong beginning second half of this year. I think that remains intact. So our view on that earning growth remains intact. So any time-based correction makes the stock market overall cheaper and more attractive.
No doubt that the correction is healthy, expected also. But in your conversation, are larger investors getting out of the mid and the small cap stocks in India?
See, we cannot speak for other investors, but I can share that the mid cap space, right? Small cap again, I won't be that much won't be able to share much. But in the mid cap space, I think there are exciting growth prospects. And in our understanding, mid cap and the small cap together is about 33% of the market, which attracted domestically, I think 66% of the flows. So that additional flow re-rated the mid cap index valuation at index level. The valuation premium went to 25%, which is at a high because the over 10 years the average is about 15%. Now, given what has happened, that premium of 25 is already down to 20, as I just mentioned. So it's possible it's come down to the average 15. But should that happen, we would view that very constructively because the mid-cap earning growth potential remains at 20% given the capex and given the government's focus on Make in India. See, any large multinational company, when they make in India, they cannot do everything themselves. The orders have to be given to the ancillary companies. So therefore, I think that kind of makes us think that earning growth rate will remain strong. So therefore, I think the mid-cap stock, as the valuation kind of corrects a bit, it should only represent a fairly attractive opportunity for someone who is a bit patient and has a 1 to 2 year investment horizon.
Okay, all right. We will leave it at that. Thanks a lot for joining in and giving us your thoughts. Let's